Good morning, everybody. It is Tuesday, February 11th, and we're going to start our prep for the ES. First thing we want to look at today is the insurance looking ahead tomorrow to CPI. It's 8:30 right now, and people are underinsured for tomorrow. We'll look for this to get well up over this red area into the data tomorrow, and we'll dive in today to what that's going to do for our price action and expectations. First, just a quick reminder that derivatives trading is inherently risky and past performance is not indicative of future returns. So we'll start off today and look at our structure of the market in terms of our flows. And our line in the sand has shifted a little bit higher up to 60.83 this morning. And being below that again tells us we can start to look a little bit more for shorts. There's a statistical edge, but it's just a little bit better than a coin flip, not heavily weighted as much as when we're over our line in the sand for the upside. That is a much heavier weighted coin when we get over that. We have a lot of buying from our systematics, 14 billion, 13 billion, 10 billion. So even if the market comes down, this will be distribution for the commercial side, for the market makers. But this also will provide support in the market and make it highly unlikely we get under this 6,007 area because this is the area where market makers have all of their cash. If we come down there, then they're flush with cash looking to buy. If we get up to 6147, which is our upper edge today, actually, this is where we start getting into the area, even with the 10 billion in buying, where our market makers will be fully flush with product to sell. They won't have capital, so they'll have to liquidate some of that to get cash. So down here they're all cash, up here they're all equities, and in the middle we are balancing it out. And that's what we look for with these edges. Key areas to watch today will be the 60.25. If we come down to here, that's kind of our last bid in the market before we get to that big cash buying area. And our line in the sand is obviously going to be critical. And up to 6102, you can see we've got a little offer here. It goes right into here. It's only about $10 million, but the fact that everything else is more favorable to the upside until there shows us the structure of the flows in the market and gives us these pinpoint areas to begin to watch. So in terms of our levels, we are going to look for price action to be rotational from 60.43 to 6100, and our line in the sand is at the 60.80 to 83. We have a lower one at 60.73, but we have a lot of overlap in here in between the 79 and 83. So that's where we're going to focus because the other one at the 73 is right at our mid-level pivot. So this area is better to be observational today, to watch and wait for what the reactions are, and then look for your moves up to the rotational low or up to the rotational high or down to the rotational low. If we get outside of our rotational zone, we're looking for 6130 and 6143 to the upside, and to the downside, 6014 and 6004. Now, to circle back to where we started today, how do we use the insurance in our pricing and price action expectations? So the catalyst is tomorrow. There is not really a major catalyst today. There are smaller catalysts, but nothing as important as CPI on the docket. We have some Fed speakers that the commercial side of the market will use to move up and down. We have the Treasury Secretary speaking and Powell's testimony today. Again, all eyes are going to be on CPI tomorrow. And so with some of these other catalysts, with Powell speaking, it's his testimony to Congress. We could see a little bit of a little bit of insurance and headwinds coming in, but not as likely. It's more likely that the headwinds will come in the afternoon. So what we're going to do is look for around 2 to 2:30. We'll check our indicator and see if we're getting the insurance buying coming in, and then we'll assess the demand there. If we see that insurance buying coming in, then we'll look for that downside move. And once that's done, we'll see the upside into the end of the day as everybody wants to wait until the last minute. And then the insurance providers in the market move the market higher to capture those premiums. If we don't see that coming in, then that opens a big risk window tomorrow for CPI. We've seen that a couple times in the past for NFP and PPI, where we don't get any insurance. Everybody just thinks it's business as usual, and that's when people get taken by surprise. That's what happened on February 18th with the lack of insurance in the market. And again, that was a volatility repricing event as well. We went into that in detail on another video. But today, what we'll look for is the market to stay within this range, likely see some of these moves on the other catalysts. But tomorrow's the bigger day. We have CPI and then also the 10-year auction, which the 10-year is what Trump has been saying he's going to focus on for handling monetary policy more than short-term interest rates. He started alluding to handling more in terms of the auctions and the 10-year specifically for growth and overall monetary focus. So that's going to be key as well. So we'll likely see a lot more insurance coming in at the end of the day and into tomorrow, which will create that headwind. So the way that would look on our chart is just like what we saw here, where people buy insurance and then we see the move back to the upside as all that insurance has been bought and the demand's out. And so then we look for the move from the commercial side of the market that provides the insurance to capture that premium. So something similar to this is what we'll look for later on today, more likely in that 2 to 30 time frame. And we can, if you have access to, if you've been a student and have access to these tools, or we will post them likely on our social platforms, maybe around 2:30, just to give you an idea. That will help you to see what is likely to come for the very end of the day. So be safe trading out there. Make sure you're watching your risk. That is the number one thing that we can control. And don't forget to check out our website for our course offerings and Discord offerings as well. And if these videos help you, please like and subscribe. Have a great day, everybody.